great to have you with us this morning. And as we enter the holiday season, investors have been in a joyous mood of late, in some ways shedding the skepticism they carried throughout much of the year. After a big run for stocks, the strategy team at Goldman Sachs has joined Wall Street peers such as Bank of America and Oppenheimer in predicting new highs for the U.S.-based S&P 500 next year. And certainly the mood has been lifted by a view that interest rates will go down, not up, in 2024. In truth, investors may be stretching a little bit on that one, not necessarily the direction of rates, but just how much action we see. Because last week, while there was a view, for example, that Jay Powell said one thing on Wednesday about rate cuts and his counterpart at the New York Fed said something else, in reality, both officials said rate cuts weren't really part of their recent discussions. And our own Bank of Canada governor also said on Friday it's still too early to talk about rate cuts. And in an interview with Amanda Lang following a speech in Toronto, Governor Macklem talked about the economic pressures that we're still facing.
We're at the end of 2023. We're moving into 2024 pretty soon. We do expect that's going to be a year of transition. The first part's not going to feel good. I'm not going to sugarcoat it. But as we get later in the year, I think we can expect growth to be picking up. Inflation should be continue to be coming down, should be getting closer to the target by the end of next year. So, yeah, we're not there yet, but we're getting there, and the end's in sight.
And that full interview will be on Taking Stock on BNN Bloomberg on Friday later this week. Now, just building a little bit on what the governor was saying there, I mean, if you want to get to the heart of what's going on, it would seem to be that inflation trends are improving. We're going to get a read of that here in Canada tomorrow with the latest data. The economy, even though there are some headwinds, has generally held up in the face of higher rates. And I know there are some differences between Canada and the U.S., certainly in the mortgage market, but if the U.S. economy holds up, because that's where a lot of the market commentary is coming from right now, that could help Canada. And in the words of economist Mark Zandi, it is increasingly clear that not only did the U.S. economy avoid a widely anticipated recession, but it was also a great year for the economy. Now, one of the challenges with investing is always picking the right course. And coming into this year, the impact from higher rates on the economy prompted many of the experts who join us on TV to urge caution and perhaps avoid the riskiest names. What ended up happening, of course, and you can see that through charts like the NASDAQ 100, is some of those assets ended up being top performers. To quote Peter Lynch, the famous investor, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Against that backdrop, let's bring in one of our regular guests who had indeed stayed fairly upbeat amid some of the doom and gloom we had seen in 2023. Adam Johnson is founder and author of the Bullseye Brief. AJ, it's nice to see you.
Oh, it's good to see you, John. And finally, actually, some of the naysayers have joined you and me with a little bit of optimism. You never want to go too far, but yeah, we have come a long way from where we were 6 months ago, whether it's inflation, whether it's a view on interest rates, whether it's confirmation that, yes, indeed, people are still working, which means they're able to actually go out and spend money, and that's good for earnings. So on and on, it has finally started to come together, and let's hope we can keep this going into 2024, John.
Well, I guess my question to you would be, do you think it is as much about how the economy has navigated through higher interest rates versus this constant narrative that rates are going to come down?
So I think we've made way too much about rates. And I say that because some of the stocks that went down should have gone down. Absolutely. Weak companies that didn't have strong cash flow as rates go up, they should be penalized, and they were. And actually, a number of them went out of business. I know because I owned a couple of them. It was not an easy 18 months. And yet, simply because rates are going up doesn't mean that every single company should go down. And yet that is what happened. So there have been a number of very high quality companies that just got absolutely dismantled. They're coming back, as they should. But I think we got carried away with rates. As far as what I think is going to happen next year, I do think they will come down. I don't think they will necessarily come down as aggressively or as far as some of the now recent bulls would like to believe. But I do think they'll come down. You think about it, John, the Federal Reserve took interest rates from effectively 0 to 5.5%. That was the most aggressive move in almost 50 years. Inflation, meanwhile, went from 2 to 9, and it's down to 3. So it would make sense that the Fed would pull back on rates. Maybe it's a percentage point. So the Fed funds goes from 5.5 to 4.5, whatever it is. I will tell you this, John, rates are not going back to zero. Thank goodness. That's unnatural. It was because of COVID. We had to flood the money. Or we had to flood the market with money just to stay alive, right? People were locked up at home. We needed all that money. We don't need it anymore. Rates aren't going back to zero, but I'm okay if they come down somewhat. And I think that's what the market's trying to figure out right now. And it's giving the stocks the benefit of the doubt. If rates come down 1%, maybe 1.5%, then you can probably take stocks up 10, 15%. And that's what we've seen over the past 6 weeks.
And then I referenced the challenge in figuring out the general direction, where to be leaning, where to be, avoiding. We sort of slice and dice the market into all these different sectors. Some stocks, some of the growth names that we've talked about endlessly this year have had these big rallies. And then I think sort of the obvious question for a lot of people is, well, can that rally continue? Or if the markets are going to have some momentum, does some of that momentum go into other sectors? So how are you thinking about the flow of funds in 2024?
Yeah, I tell you what, here's how I'm approaching 2024, John. Think about a barbell strategy. You've got some stocks over here, you got some stocks over here. In the middle, forget about it. Keep it simple. Over here, you've got the normalization stocks, companies, stocks that fell way too far because of rates and are now coming back with the economy. And whether you want to talk about financials like Bank America or Chubb Insurance or Charles Schwab, or whether you want to talk about travel stocks, because people still do have money and they're spending a lot of it, like Delta Airlines, like Expedia, like Wynn Resorts, fine. Those are normalization plays and they're coming back. A United Rentals on the industrial side, right, where you rent equipment, still only trading at 12 times earnings. That's cheap. Over here, John, you have artificial intelligence and that entire ecosystem. And that's where the growth is. This is value. Normalization is value. These stocks might go up 30, 40%. The AI ecosystem, these are the stocks that can double, triple, quadruple. It's more than just NVIDIA, which makes the world's fastest chips. It's databases. It's 5G infrastructure that enables all that data to flow over the internet. It's industrial companies that are putting that AI to use with automation and robotics. The AI ecosystem, John, is very powerful. And I have my American Ingenuity portfolio in some of the normalization names and a lot of the AI ecosystem names. You could have an entire portfolio of each. I like to have a little bit of both. 2/3 AI ecosystem, 1/3 normalization. I'm good with that.
Okay, so while we do know you like to focus on American Ingenuity, you also came to the table today with a well-known, an analogy tied to a well-known Canadian in Wayne Gretzky. What's another consideration for next year when it comes to the broader investing theme?
Well, the Wayne Gretzky illusion, of course, skate to where the puck is going, not where it is, because where it's going is better than where we are now, or certainly where we've been. I was talking with your producers earlier, John, and they said, do you like anything in clean energy? And I said, oh, my gosh, clean energy has been a disaster. I think I've lost money on just about every clean energy pick. The reason being that without the subsidies that have made clean energy attractive to consumers, these companies can't stand on their own. They don't generate enough cash flow. We're not far enough along the clean energy curve for them to have scale. But I will give you one. I'm not making money on it yet, but I think I probably will at some point. MP Materials. It's the largest and only working rare earths mine in the U.S. It's pretty tough down here with the whole green coalition, John, to actually get approval for anything oil and gas or even clean energy related, because it's mining, and mining's practically a 4-letter word down here these days. But MP Materials is very exciting because it's the only rare earths company operating in the U.S. So it gets us away from China, and they're also becoming vertically integrated. So they pull those rare earths out of the earth, they refine them, and then they actually make magnets for the electromagnet motors that are the future of EVs. It's a long haul. Clean energy has been hard, John. but there's one for you.
Okay, AJ, always appreciate all the ideas you bring to the table. Have yourself a wonderful holiday season. Adam Johnson joining us of the Bullseye Brief. We're going to take a quick break. When we come back, we mentioned that oil prices are higher today as we've continuing to see some of these headlines coming out tied to attacks on vessels through the Red Sea. And now we're seeing BP with essentially a pause on tanker movements. We'll get the latest details next. You're watching The Open on BNN Bloomberg. Stock, yeah? Adam, you're okay to do one stock, yeah?
AI ecosystem, but if you want just one, maybe we just do MP materials like I just talked about.
Okay.
Whatever you want. Whatever you want.
Yeah, sure. Let's
AI ecosystem or MP?
Let's do MP. Okay. 3, 2, 1. Adam Johnson, if you had to pick one stock tied to the clean energy transition right now, what would it be?
MP Materials, John. Ticker is MP. They operate the only rare earths mine in North America. That gets us away from China. What's also interesting about this particular company, John, is not only do they bring the stuff out of the ground, they refine it, then they make it into magnets. MP Materials, my clean energy play for 2024.